Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Everything we do, folks, here is about a conversation with people with breadth. There are few in the Western world with a breadth of finance like Huw van Steenis. I'm not going to bore you with a resume. He wandered by a school named Oxford a few years ago, did some serious work with Bank of England, and had a tour of duty at Morgan Stanley. He is definitive on our financial system. Tim Adams, Scott Bessent, 10 a.m. What's a question you would ask the Secretary of Treasury?
Wow, Tom, thanks for having me on. Look, one conversation I'm hearing, which doesn't come out in the press much, is about the strain on cash flow for small business. You know, it's a huge topic for private equity and for banks.
Right.
Let's imagine you put in a 10 million order in for toys. You now have to pay $24 million if they come from China. You simply don't have that cash flow. So my question would be, how worried are you about small business not being able to stock their shelves?
Okay, folks, you flunked this in a CFA exam. I've done it. I've enjoyed it. Working capital, and this is to go into the way a business runs. There's a thing called the cash conversion cycle. Paul, did you memorize that?
Yeah,
that was with the 3 ratio and the 5 ratio DuPont formula. Huw van Steenis, you're expert at this. When you see tariff adjustments, I don't understand how you go from 3% to 10% or 100% and your world blows up. I mean, that's where we are, right?
Well, look, I don't think any of us have seen anything quite like this before. I mean, I think I wrote a bit about the Nixon shock where obviously Nixon did impose a 10% tariff for 4 months.
4 months?
For 4 months, but I guess the markets can't stand that, wouldn't tolerate 4 months here. And that did lead to product shortages and to price spikes because simply people couldn't fill the shelves.
What's the cash conversion cycle do at Walmart? That's the heart of the matter.
That probably Walmart's not my expertise, but if I think about the conversations we're having, the focus is particularly around retailers, small businesses who just don't have the cash buffer. If you're Walmart, clearly you're really large, you're very sophisticated, you do have big cash buffers. But if you're a small business running from quarter to quarter, month to month, how are you going to be able to pay 2.4 times what you expected when you may be worried about not being able to pass it on? So what we're picking up is people trying to wriggle out of their orders if they can, and at least not renew those orders. That's the conversation that finance is having, which I don't see enough in the mainstream press yet.
To the extent that the president and his team are walking back some of this tariff rhetoric, has some of the damage already been done, do you think? Are we seeing it in the system already just because of the rhetoric?
So I think this is where we need to distinguish between like sort of the growth shock and then kind of, let's call it the more institutional shock. All the taboo questions which we wouldn't have asked in the past, which are now opened. I think in terms of growth, it clearly has been a bit of a punch in the gut for small business, which is the heartlands of America. Yep. Larger business are clearly ducking and diving through this. If I think about my area, thinking about the finance. Look, the volatility has actually been quite good for the investment banks because they've been trading.
Yep.
But the business confidence,
one section, but
the lack of corporate confidence is pushing deals to the right. And certainly our conversations is some firms think actually the deal pickup now is not till 2027, not till 2026.
That's the first I've heard that. Wow.
Yeah, interesting. So, I mean, I guess if nothing else, we've heard this a million times before. The markets don't like uncertainty. But we're starting to see it in the survey data, whether it's the University of Michigan data or the, the PMIs. It's out there, right? I mean, it's not in the hard data that maybe the Fed looks like, but we certainly see it in some of the other softer data.
Yeah, I mean, look, I'm sure, my good friend Torsten's looks great on this, trying to slice and dice this. But if you look at, ships coming into LA or elsewhere about their stocking, they're down by a third to a half. That's clearly a sign of stress coming into the system. No, look, I mean, the data will come through, but the Fed will need to be very can always be data dependent, but it will be the historic data. Markets are clearly going to move way faster than that.
Huw van Steenis with us, folks. He's with Oliver Wyman. Can't see the importance of this for global Wall Street. Even more important, in 50 minutes, Scott Bessent with Tim Adams in Washington. Hugely anticipated. Okay, you mentioned Torsten Slok. You're Apollo Management. You want to go out acquire. You get the Deutsche Bank brainpower of Dr. Schlock. Wonderful. The bottom line, and this is Paul's world, is I don't buy for a minute everything's wonderful in private equity. What does an adult like you do? What are the tea leaves, the litmus paper, the measurements you're looking for stresses in private equity?
It's a great question. Look, these are unbelievably entrepreneurial folk, and so they're trying to sort of weave their way through this. Look, I think the first and second line is really about the order books. Has the sales come down? Whether I've got highly leveraged companies trying to forensically work through that. So I think it's about cash conservation and it's about getting a cost down. So I'm already picking up people saying to all their management teams, have you thought about a cost round? What are you doing about that? So that's one. But on the other side, in credit land, there are actually people trying to look at this as an opportunity and actually trying to buy in some of the credits at wider spreads than we'd seen 8 weeks ago.
There's somebody selling those spreads.
Totally.
Do they book a loss now?
Again, it depends. So we're talking about the private. Let's be clear. About 60% of the new inflows for the private market firms for the last 2 years has been credit. And overwhelmingly, as we've discussed before, that's coming from the insurers. These are steady hands. They want to deploy in size. But obviously on the equity side, there is more stress in the system.
Paul, I'll whisper, okay? Paul, AIG. Okay, next. Continue.
So, Huw, has Wall Street kind of, with the earnings estimates out there, has Wall Street adjusted to this new uncertainty, or do you still see downside risk to earnings estimates out there?
God, look, I think let's be clear, everyone is struggling to comprehend the range of scenarios. So to give you a simple answer is just inconceivable. I think if you like, what are the simpler moves? There's like the overwhelming conclusion of this will be to find a better way to diversify your portfolio. And that at the moment, the one-way trade is look more towards Europe and Asia. Yep. And look, European banks are still up 25% year to date.
Wow.
Let's be clear, and I know that may not be the place, that's a smaller market for you, but I've clearly on this side of the pond, look, I think it comes back to how corporate confidence plays out and the stress in the system and how quickly the administration blinks. These are, complex questions which you're dealing with every day.
Okay.
Sorry.
This is his wheelhouse. Huw van Steenis, folks. You got to start somewhere. And he started by being the required 14-page read every 4 or 5 days in the European banks. I mean, I'm doing, folks, what Huw doesn't understand, Huw's never used a Bloomberg. He has no clue. And the bottom line is I got JP Morgan hitting the ball out of the park with a price to book of 2 times and trading at 1/3 even after the 25% rally is BNP Paribas of Paris. I get the idea the English, the French, whatever banks are off the mat. But do they have the growthiness of America? I don't buy it.
No, I totally buy that. So that's a value trade, not a growth trade. Look, I think the challenge here is this is a growth shock and then somewhat of an institutional shock. And I think all the financials I'm talking to are working through reworking their plans, but they're struggling to sort of be precise because they just don't know how quickly the administration will blink on tariffs and therefore how big a shock it is to the system. But you're right, Tom. Europe's a value trade, not a growth trade.
So, but Huw, we have seen, I guess as recently as kind of late last year, very early this year, international money, non-U.S. money was coming into the U.S. markets in waves, and it was really noticeable. People were seeing in funds flows. Now that seems to have reversed a little bit. And we're now seeing funds go back into Europe, back into other parts of the world. Is that a short-term trade, or is that something more sustainable, do you think, that those funds back out of the U.S.?
My sense from the international asset owners is that they want to continue to repatriate. And I think that's partly a tactical concern about the market situation, but it's also about weaker dollar. But also there's institutional pressure to deploy at home. So if you're the the largest 8 Canadian funds, they're looking to try and help the home building spree that my old boss, Prime Minister Carney, is going to be doing alongside many other initiatives. In Europe, some of the big pension funds are looking to help fund the defense spending spree about to happen. So all of them are thinking strategically they need to have more money back at home. Now, that's at the margin, but it's definitely more money coming back.
Well, let's rip up the script in an extended conversation with Huw van Steenis of Oliver Wyman. Dan Tannenbaum's so brilliant on sanctions. They've really put together a huge team at Oliver Wyman, and we're thrilled he could join us in our studios today in New York. So then let's rip up the strip on this and go 60,000 feet. Mark Carney, there are other worthies that are driving our, Mr. Powell, the others that are driving our financial system. The heart of the matter is the renominal GDP. Finally, back almost to Konrad Adenauer and Willy Brandt, we got to have a Germany with pop. Do you buy it?
So I think this is the spending of probably up to €1 trillion about rearmament, defense, and just quite frankly resilience is a real game changer in terms of.
But you think they're going to execute?
But I think they'll be slower to execute. I mean, look, one area we've chatted about before is it's not just about government spending. You need private sector spending, and the of breadth and depth of capital markets in Europe are still not the deep depth you want. And we need the plumbers. We need the plumbers to try and get the system to work much more effectively.
Who are the plumbers? I don't know.
But let's say, I don't know. If you look at the States, there is $4 trillion of US insurance money is in the market to fund the system. European insurers have got straitjacketed about how they can put money into equities, into venture capital, private equity. They're really stuck in government bonds.
This is the heart of the matter, folks. What he frames far smarter than me or Paul. The absolute heart of the matter. Can Europe, can the old world, can Rubini and Taleb's old world equitize? That's the heart of the matter.
I think it's right. It's equitize and providing risk capital, because it's really about, it's venture capital, it's growing small businesses, it's how do you do all these, defense tech startups. We need a range of risk capital. And the way the market, it's improving, but we need to turbocharge it from here.
Paul, I had a conversation with Lagarde, is trade minister of France, ready? 21 years ago. And we were talking the same thing we're talking to Huw van Steenis
exactly.
about right now.
So Huw, in terms of Europe kind of reinvesting in their infrastructure, maybe in their military, I guess what I've heard is, okay, Germany can do it. Poland probably could do it just because they have been doing it for a while, because given their geographic location relative to Russia. But can Spain do it? Can Italy do it? Can Portugal do it? I mean, do they have the wherewithal to do that?
So there's a fiscal question, and then it's kind of like, do they have the right ecosystem, the skills, the expertise? And you can see that actually, because Europe hasn't been investing in defense, there's been a real, aerospace is good, because there's a whole cluster around in the south of France. Actually, you should go and visit one time around, where the aerospace industry is coming from. But elsewhere, in terms of drones and some of the other areas, it's going to come. Look, the fiscal challenges are huge, and that's But in a way, what we've seen here is that the fiscal spending has been part of the US exceptionalism. The real boost to spending here has come from the government purse, rightly or wrongly. I think we're going to get some of that in core Europe. Whether we're going to get enough to justify the valuations is a bit a tougher question.
Huw van Steenis, thank you so much.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Joining us now, the Fun for Lunch Bunch crew, Lisa Mateo and Daniel Ives of Wedbush here in a bright pink. For those of you on radio, you're lucky. Wearing bright pink today. Calm it down, Dan. Is this a corduroy look you're wearing?
It is. It's a corduroy look. I mean, it could be a little even Sweeney influenced.
I don't know. Lisa, you can't see me wearing that, can you?
I cannot.
I could see him walking into a showroom, a Tesla showroom, and saying, "I'll take one of those."
I'll take one of those.
Why don't you leave it up with his worship?
Dan, we had Tesla report earnings last night. We had Mr. Elon Musk on the earnings call. The earnings were very disappointing, yet the stock is trading higher. Why is the stock trading higher here?
I mean, numbers basically took a backseat. We already knew it was a disaster quarter. This was the moment of truth for Musk to basically, what I view as it's an off-ramp to Trump White House and Doge. And that's essentially what he did. And he took a major step back on Doge, says 1-2 days a week. I think this is the beginning of the end there, and going to recommit as CEO of Tesla. Look, the reality is, and we've talked about on the show, brand damage was at a point he had to read the room. And if he didn't make this decision now, it would have been dark days ahead. And that's why the stock's going to be up, because now Tesla got back at CEO.
Now Tesla's in a new world of competition. It just looks to me as a layperson here, China is taking over the EV market globally, with the exception of the United States. How does Tesla deal with BYD and others?
Look, I don't view as, that it's you can't have success from Tesla as well as BYD. I don't view it as zero-sum game.
Okay.
But look, Tesla has work cut out for them. I mean, they have to have a new vehicle that comes out. You have to have the refresh in terms of Model Y. And the reality is China's 45% of sales. So that is the hearts and lungs of Tesla. But that's also why it's so important. There's only one person that could engineer this turnaround in China. It's Musk.
And I think Elon is probably the best I've ever seen of kind of, maybe Jeff Bezos as well, kind of redirecting investor sentiment where he wants it to go. And I think he's saying, don't look at me as a metal bender car company. Look at me as an AI company, a robotics company. Is that valid?
I mean, we believe the core value of the future of Tesla is autonomous and robotics. And obviously, Keene will be in that unsupervised FSD in Austin in June. I know he's getting ready. And look, I think this is just the beginning of what we're going to see in terms of autonomous. That, to me, is the core value.
You're not going to do autonomous on 58th Street, New York City. I mean, it's just not going to happen.
I truly believe over the next 3, 4, 5 years that autonomous is going to start to represent 5, 10, 15% on.
Rarely do I say I don't agree, but he's wearing pink. I don't agree. Okay, let's go to Intel. We've got a major story out this morning. This has gone worldwide instantly on Bloomberg. This is Intel down 66% from the peak, and it's just simple. Brilliant reporting by Jane Lenny Lee and Ian King. They're going to lay off 20% of their staff. The annual report of 2019. We are a world leader. Our vision, our commitment to corporate responsibility and sustainability. What happened? This thing was iconic. Dun, 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 dun.
I mean, just think about it. Go back to where NVIDIA was 2019, 2020. I mean, if you look from Gelsinger to just the whole corporate structure there, the red tape. I mean, Intel... It's really a business case study for what happens when you go.
It is a CFA business case study.
It is. It's what happens when you're on the treadmill. You think no one's going to catch you.
Okay.
Apple makes their own chips because ultimately they boxed out Intel.
I am a Kodak brat from Rochester. I live this with Kodak. The marketing guys take over. The slick guys take over. And the company goes down the tank until you bring in Culp from GE or Danaher to bail it out. Their growth strategy is they got to get back to basics in an engineer-driven company. Is that a legitimate model, or is that just blah, blah, blah?
I think it's a model, but I think those days have passed. I know that they're doing this huge cut that was reported, on Bloomberg, but I think the reality is that this is going to have to be a breakup. They're going to have to restructure the company. You're going to have to ultimately sunset different projects, focus on some of the growth areas. Because the reality is for Intel,
right?
You talk about dark days. I mean, if you look up disaster in the dictionary, you'd see Intel's ticker.
Okay, my book of the summer, I think maybe it was book of the year, I can't remember, it was Chip War. Is Intel competing against Taiwan Semiconductor? Are they competing against some amorphous Chinese blob we don't know? Who beat them? Who defeated Intel?
I mean, AMD, NVIDIA, TSMC. I mean, when you think about Intel had the opportunity, just go back to AI, the opportunity to go after AI, go back to next generation chips. And what they essentially did was, look, it's no different. Like they're like a typewriter company, mid-90s, being like, this internet window, this is ridiculous that people, and what happens 2 years later? That company is bankrupt. So
I got yelled at for that.
Look,
I would say, no, dog piles for real.
But that's the sad thing that's happened in Intel. And look, you obviously have a new CEO, but this is a very, it's really the collapse of a U.S. icon.
Paul, ask a question. My rods and cones are hurting.
Exactly.
My eyes are hurting, folks.
Hey, just a red headline crossing the tape there, Tom. I want to get that out. Boeing, first quarter negative adjusted free cash flow, $2.29 billion, and the estimate was $3.4 billion. So better on the free cash flow story for our friends at Boeing. The stock is up about 5% here.
Oh, look
pre-market.
at that.
It's ironic talking Boeing and Boeing and Intel in the same sentence.
Exactly. We got Apple, we got Amazon, we got Microsoft out with earnings next week. What are you looking for? Is it driven by tariffs? Is it AI? What's driving tech these days?
Look, the reality is that I expect basically no guidance or some crazy caveat guidance. Again, but when you look at like Apple, it comes down like if these tariffs get them de-escalation, the story massively changes, as we've talked about, because then iPhone 17 comes out, the AI store. You think about it from a hyperscale perspective in terms of CapEx,
Right.
everyone's waiting. But this, look, today, it's a pivotal moment, whether the walls were caving in or whatever, and for tech, a huge bullish day.
I got 42 seconds. You've been on the floor in China where they make Apple stuff. Can Americans do that? We got funny videos, snarky videos out on Twitter of people, Americans sitting there making iPhones, and people are laughing. This is not funny. You're an expert at this. Can you transfer that manufacturing discipline to Illinois?
I've said from the beginning, it's impossible because of the nature of the IP in the supply chain, the nature of the labor force there. When you're in Taiwan, when you're in China, and that's why I've said from the beginning, we've talked about on the show, last 3 weeks, fairy tale that's going to happen. And again, if you want a $3,500 iPhone, let's build them in New Jersey or Manhattan. But the reality is we see no way that happens. I'm not saying onshoring can't happen, but that is a fairy tale, and that's why the market has reacted the way it has.
Yeah, Afterthought just woke up, and she emailed in. She said, can you ask Mr. Ives if you can get his tailor? She thinks I'd look good in a pink.
I've told you pink's your color, but I'm glad others.
Is this a New York tailor we're looking at
no,
here?
this is actually Taiwan, but the point is like, look, but I'm glad Keene's finally on the train.
Did a clear customs.
Dan Ives, thank you so much, particularly the comments there on Intel.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We're pointed in direct now with one of our favorite people. Christopher Grisanti is with the MAI Capital Management, someone that's looking, I would say, all in all for the growthiness in value, and his world is turned upside down. What's the value of cash now? You say in your research note you were trained on this to go from equities, I think I'll buy bonds, but it's price down, yield up.
Sure.
So where do you hide?
Tom, that's a great question for this particular market. There really has been no place to hide. We were glad to have the cash that we had. The interesting thing about this though, is with the market down 15%, we're actually not buying the dips. So, we love value opportunities, and typically this would be one. We just can't do the math because we just can't build models because the future is so uncertain. If you're Mary Barra, are you going to build a factory? Are you going to wait? Are you going to hire people?
Wait.
You're going to wait. And so even if the tariffs went away tomorrow, I think there's been enough of this paralysis in the system that I'm relatively confident we'll be in a recession by the end of the year.
So, I mean, a lot of folks are suggesting kind of what you are, that even if they pull back tariffs to some degree, which it appears the rhetoric is moving that way, at least today, I guess.
This hour.
That some fundamental damage has been done, whether it's supply chains, confidence in the U.S. economy, confidence on the part of the consumer, executives.
Well, we've taken 80 years to build a system, were we screwed a little bit? Yeah, we were. But did we benefit from it? Look, Paul, 35 years ago, 12 of the top 25 companies in the world were American. Now 22 of them are. It's hard to argue that this is terribly skewed against us. So when you monkey with that, it causes uncertainty. But uncertainty is a nice vague word. What you're going to see within the next 2 months is a pause in corporate earnings growth. And that's what's really going to hurt the market. Because as Tom, Ben Graham said, look, in the short term, it's a voting booth, but in a long term, the market is a weighing machine, and what it weighs is corporate earnings, and corporate earnings are going to start to fade.
Right.
The estimates have already come down a bunch, and I think that's just the beginning.
You come into this with a whole twisted resume of an actual legit massive corporate law career, and one day you decided that you liked the 4 accounting statements better, and the CFA and all that. But the heart of the matter is, Chris Grisanti, should we change our retirement plans, our allocation, or even our hopes of a timeline?
Not at all,
based
Tom.
on this?
Not at all, Tom. And as any good financial advisor will tell you, you prepare for this moment years before. You have a diversified portfolio. And by the way, if I'm right and there is a recession, generally the market falls 25 to 35% in those cases, very broad range, but just generally, and we're more than halfway there already. So now pretty soon, if this gets worse, as I suspect it will, we'll start looking for the opportunities. And then as things get more certain, we'll be able to do the math. I think the math will be worse than we thought it was going to be, but then we'll be able to step in. So, the cycle completes itself again.
Chris, I look at this in value and growthiness. Is the Mag 7 growthiness broken?
I don't think so, Tom. I mean, the Mag 7 isn't monolithic. I thought the Tesla numbers were terrible yesterday. So that may be broken. We'll see. They need to do some new models. But the Amazon model's not broken. The Apple model's not broken. They clearly have headwinds, but the storm will pass one way or another. These are very dynamic companies that can adapt to this stuff. It's just, we got to redo the math, and the math isn't going to look as good as we thought it would 2 months ago.
So, it seems like this market wants to move higher. I mean, lack of tweets or anything positive on the Twitterverse seems to move this market materially higher.
And Paul, that's not a surprise. I mean, it was so oversold. And I would expect over the next couple of weeks, we may get a trade deal or two, and then that will be a catalyst for movement higher. But again, in the long term, it's a weighing machine. What's going to happen to earnings? That's what we can't take our eye off the ball.
Yeah, we still have 8 or 9% earnings growth this year, maybe 11 or 12% earnings growth next year. You think there's downside to those numbers?
Oh, yeah, because a month ago you would have said we've got 13% earnings growth this year. Now it's down to 8. And I will just about guarantee you if we have this conversation in June, it'll be considerably lower than that. But we'll see.
How will corporations adapt?
Tom, the way they usually do, they'll lay people off. They'll postpone capital expenditures. So,
Okay.
They'll tighten
Let's
their
bring
belt.
it forward. Anna Wong's got us with a 5% unemployment rate out there somewhere. I haven't had anybody model 6% yet, but you get claims, what, Paul, 300,000?
Yeah.
280,000, whatever. You get the unemployment rate to go. The Fed does what Mr. Trump wants them to do. They begin a rate cutting cycle. The system heals, or is it just broken?
Well, that's how the problem is the tariff news has kind of pulled forward. Well, first we have some strong sales up front, but we haven't gotten to the earnings downturn yet. So we can't fast forward this recession. It's going to happen. The market will drop what it's going to drop. I mean, it's going to happen more probably than not. So yeah, there's ways to come out of it, but I suspect equity prices will be lower when those ways have to be employed.
Chris Casanti, thank you for the MAI Capital.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Mick Mulroy is truly, we get a huge response when he's on. He's with the Lobo Institute. He has public service to the nation, an extended career with the United States Marines. He's a former coach at USA Boxing.
Really?
He does it all. Joining us now from Montana, Mick Mulroy. Mick, I want to pause for a moment here. You're in Montana, and the East Coast view of the military maybe goes distant to Virginia Beach to talk about the Navy. Maybe they get up to Army Navy at Philadelphia. The hallmark of my ute was a Strategic Air Command at the 341st Wing in the middle of nowhere in Montana. That's the backbone, not a bunch of offices at the Pentagon. And your Defense Department now is under not complete collapse, but huge controversy with the Secretary of Defense. How does that affect the Air Force in Montana or the Navy in San Diego?
Good to be with you guys. I mean, ultimately, the military is going to carry on regardless of the issues with this civilian leadership in the Pentagon. That said, it really does reflect on who is in charge when you have this level of resignations and terminations. I haven't seen it. I don't think anybody has seen it in this state. And that does, I think, have, when it comes to the line, soldier, sailor, airman, Marine, confidence in the leadership to see that is not a good thing. But I do think we are still in good hands. The chain of command is strong. That's why they have it that way in the military, and we can certainly man all the important positions that we have.
Mick Mulroy, then, if it hasn't filtered down to the troops, are we ready to defend the nation now? I mean, is this a properly budgeted Defense Department, a budgeted Pentagon?
So I do think it is. There is talk about increasing the actual overall expense of the Defense Department, probably to try to make these giant leaps in technology that we really need to stay far above what we call it the offset of our adversaries. And I think the military is adjusting to that. So I don't want to give people the false, in my opinion, the false impression that somehow the military itself is in disarray. I do think it's important to have a solid chain of command, and the Secretary of Defense, of course, is in that chain of command. So there needs to be a lot of changes at the top, certainly the way we handle classified information. But I think it's important for Americans to understand that the military is fully capable of defending the United States here and abroad, even with this level of what's being described as chaos.
So, Mick, I mean, I guess the latest news for Defense Secretary Pete Hegseth has been the disclosure that he has, I guess, shared sensitive details about impending U.S. attacks on Houthi militants on an unsecured commercial chat platform. Is that a big deal? Is this warranted, this concern?
It is a big deal. The reason why it's called unauthorized is because you're not allowed legally to share classified information. And if the reports are correct, these are specific attack plans, time, place, and manner of how, in this case, the U.S. Navy was going to carry out aerial strikes against the Houthis. So this is very sensitive information. I think anybody can understand that. If this were somehow to get to our adversaries, like Russia, they could give it to Iran, they could give it to the Houthis, and then they would know essentially how to defend themselves against incoming attacks. So it's super sensitive. In addition to that, using the wrong platform, at least reportedly, people that were in this chat did not have all of the necessary security requirements and a need to know. Well, essentially,
Right.
if you just look at who's listed, they had no reason to know this. So this would be something that if you were a private, a seaman, an airman, you would likely be removed immediately and investigated under the Uniform Code of Military Justice.
Mr. Mulroy is with the Lobo Institute, and we thank him for being with us.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
We're going to walk forward, stagger forward to the newspapers. We do this with Lisa Mateo. Lisa, what do you have?
Okay, so we all know professional baseball players, right? It's all about the swagger, the style. But the
Yes,
Wall
I-
Street Journal says it's actually trickling down to Little League. So parents, moms and dads are spending big bucks. They're talking about sliding mitts, you know, how the professional pros wear those.
you gotta stop
I don't know
with
about the
that.
sliding mitts, but they start around $50. But now parents are buying them for
Well,
the
you're
kids.
a softball mom.
Yes.
You know this stuff.
We don't do the sliding mitts. We do like the elbow guards. We'll do
Okay,
those,
all
like
right.
that kind of thing. But what they're also doing is these crazy colored batting gloves. Hello, Bruce Bolt. Arm sleeves that we do, the crazy colors. Expensive sunglasses. Hello, Oakley. Yes. Fancy helmets too on top
So
of
it's
it.
become like ice hockey,
It's-
where you
it's-
have to sell the third child.
You
do
do.
it.
And it's all for these fancy things. You can go with regular,
Well,
but
what
no,
I notice,
they have
what
to
I notice, I
upgrade.
watch SEC softball sometimes because I
Yes.
love the pitchers. I can't believe how
Yes,
hard they
yes.
throw it. But they all wear amazing makeup. I mean, they're
and the
all,
hair.
and the
It's
hair,
about the hair.
the
You
hair,
have to
the makeup, and
understand.
it's unbelievable. I mean,
But that's what it is. It's about the look.
yep, okay, all right.
Too. So that's what it is. Custom fielding gloves. I mean, I know my daughter has a pink and white one with the Puerto Rican flag on it. Like it's crazy what you do.
Oh,
but
I think she's taken over the program
I
here.
think she has.
Is there something else you'd like to mention about the third summer camp you're going to?
I can't flights and hotel stays.
No, not
rental
next.
cars.
Lisa's in
There
therapy
we go.
here.
Thank
It's
you.
therapy worldwide.
Woosah.
Okay.
But that's what it is. But
Inhale
they're blaming.
deep,
They're
exhale
actually
deep.
they're blaming the pros because they're saying the MLB switched their rules.
Stop.
So now they're allowed to wear the
Stop.
colorful
It's
things.
it's a jackocracy, and it's the mother's fault.
It is the mom's fault. I
It's
know.
the mom's fault. Next.
Okay, here you go, Tom. This one's for you. Some Gen Zers and millennials are still opting to live with mom and dad. So a lot of more kids are living with the parents for longer. So
killing me.
Gen Z, 13 to 28, so 28, and then you have millennials 28 to 43. So just to give you an idea of who we're talking about. They're starting to live with mom and dad longer. It's a Pew Research, center analysis, and they say the biggest places where this is happening: Texas, Florida, California, where jobs are kind of hard, wages are maybe not enough in some areas, and there's a gender gap too. So it turns out that men are living with mom and dad longer, 20% compared with 15% for the females who'd go off on their own.
Epidemic in Europe. It's completely preponderant in Europe.
Yeah, always.
It's like I would say it's a majority. I don't get it. I got to be careful what I say here on radio, but it's there, right?
It is. And they say it is getting better. Like it's dropped in recent years, but it's still above like the historic lows that we
go to Paul Sweeney, who is the only person I know in the surveillance universe whose children are all employed.
Yeah.
What's the pixie dust, oh wise one?
I went from 6 bedrooms to 2.
There you go. Making sure they're not coming back.
Exactly right.
The governor of New Jersey, sent you condolences.
Yep, exactly right. So
one more quickly.
Last one quickly. Yes, if you've been to the airport lately, the latest thing now are rooftop decks. This is happening at a lot. Yeah, they're doing these outdoor spaces. So a lot of airports are stepping up their game. LaGuardia's Terminal B, they're going to have that new Capital One landing lounge. It's going to have the outdoor terrace. But we're talking about not even the lounges, but regular airport, like 4 green terraces at Pittsburgh International Airport are coming.
Well,
so
we have one at Carmel,
space.
California, and I take my kids when they were little. We'd sit there and get like lunch and watch the planes. But that's Carmel, California. That's not LaGuardia.
Correct. They do have the heaters and everything kind of set up for that. But it's just like the new thing. Like they're upping their game.
Yeah.
So.
Lisa, thank you so much.
Yeah.
Lisa Mateo, there with the newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.